So I'm here today representing private clients and family and owner-managed businesses, and I think everyone would have expected some tax giveaways today before a 24 general election. The majority in this statement went to larger businesses spending more than £1 million a year on capital items, where he's promised an extension to full expensing. But the national insurance reductions will definitely help put money into workers' pockets, and so the commitment to the triple lot for pensioners. But employers didn't get that national insurance reduction. For family business owners, though, the national insurance reduction will further swing salary as opposed to dividends as a potentially more favourable form of cash extraction from a company, with the effective rate on paying salary from a company to a higher rate taxpayer reducing to 49% as opposed to dividends taxed at over 50% for those companies paying the 25% rate of corporation tax. Every taxpayer is different, so there's not one size that fits all. Do have a look at our website and our cash extraction calculator. 3 additional things I'd like to pick up following today's announcements. Firstly, it was a shame that the Chancellor didn't use the opportunity to address the impact on households with children, where benefits start to be withdrawn at disproportionately high marginal rates for those earning more than £50,000. Additional childcare support will help, and that was announced back in the spring, but they're not coming into full effect until September 2025. Secondly, fiscal drag is increasing the compliance burden on taxpayers, with nearly a third more expected to have to register for self-assessment by the end of this Parliament. I'd have liked to see an increase in the basic rate band or personal allowances, and the government row back on previously announced reductions by 75% or more of the dividend exemption and capital gains tax annual exemptions, respectively to £500 and £3,000 from 24-25. Until our tax system's fully digitised, which is a long way off, I think, additional pressure will be added to HM Revenue and Customs, who are already struggling to deal with the weight of their work. And that is very frustrating for clients and advisors alike, and adds to the cost of tax take. Finally, following speculation, I was not surprised that inheritance tax has not changed in this statement, given the relatively small number of taxpayers who suffer the tax and potential political backlash. It's certainly one of the most draconian taxes, which many of our clients would love to see the back of. But if it is to be retained, there must be recognition that there's a need of reform, and any changes to simply restrict business relief, which could result in IHT on family businesses, needs to be considered as part of a much wider review of how we want to raise taxes through capital. So in conclusion, the government will no doubt hope that they've done enough today to provide some growth in the economy and get them some votes, but there'll be more to give hopefully in 2024 in the final pre-election spring budget.